Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here as we approach that noon hour Central Time. Is it going to be the noon swoon or the noon balloon? Now, we need a noon balloon, don't we? This has been kind of an ugly one here today, folks. Let's take a look and see what these markets have got in store for us. I've got corn pulled up here. That corn board is ugly, and it got a little uglier. 7 3/4 cents lower now in that front month, July, to 4.25 3/4. That's 2 1/4 cents off the low of the day, but well off the highs by about 8 3/4 cents. We've got a D board. That's new crop down 8 1/4 cents to 443.5. Ouch. 2.5 cents off the low of the day, 9.5 cents off the highs. We've got a 12-cent range working on these new crop corn. So there you go. That's what's happening there. Moving over to the beans, they've got some solid double-digit losses here today, right? July's down 16 3/4 cents to 11.58.5. That's just 3 ticks off the low of the day, folks, and we're working on, I'm going to call that a 22 1/4 cents range. Boy, oh boy. No, that's down 20 cents to 11.10.5. And again, that's now 3.5 cents off the low of the day and well off the highs by about 21 cents. That's soybeans. If we move on to the wheat in Chicago wheat, that's going to be down 10 cents in July to 542.5. That's 1.5 cents off the low there. Well off the highs by about 13.5 cents. If we move on to the Dees wheat in Chicago, 9 1/4 cents lower there to 585. Again, 2 3/4 cents off the low of the day, 12 3/4 cents off of the high. That's Chicago wheat. From Chicago wheat, we go to the Kansas City wheat. That would be the hard red. 6 cents lower in that July contract to 575.5. And again, 2 1/4 cents off the low of the day there, and just about a full dime off the high of the day. That's July. Let's move out to Dees, and that's 5 cents lower there to 596.5. Lost that 6 handle. We're about 2 1/4 cents off the low of the day there, and about 8 1/4 cents off the high. That's hard red in Kansas City. If we move over to the spring wheat, well, what do we have happening there? That's 5 1/4 cents lower in that July board. $6 even is last, 2 cents off the low of the day, 11 1/4 cents off the high. You go out to the March, that's 9 cents lower to 642 1/4, 2 1/4 cents off the low there. And I'm going to call that about 11 3/4 cents off the high. Moving right along to the cotton, this is one that we can linger on. It's higher. July is up 221 points to 73.50, 19 points off the highs. You go out to the new crop, though, that's up 147 points to 74.86. And that's about 32 points off the high there. Let's bring in our next guest analyst. That's going to be Mr. Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. Thanks for being on the show. Tommy, I think I'm a happy belated birthday to you, all right? Maybe yesterday was a big day yesterday?
Yes, sir.
49
yes, sir,
again. All right. What are your thoughts here? I mean, it's definitely not a turnaround Tuesday, that's for sure.
No, the markets have seen quite a sell-off here, and there's moisture all around, and too much. Obviously, I had a client call me from Minnesota, said this is just so hard to watch the markets tank as he's had a ruined crop. But for the crops that aren't ruined, they've had moisture. And I've been in this business long enough to know not to be long corn during my birthday. I've told clients for years, if the drought map isn't lighting up all shades of orange and red, you don't want to be long corn between June 24th and through the 4th of July holiday, which means you should have laid some of that risk off. You should have had sales. You should have had this. You should have had that. Woulda, coulda, shoulda, Grain Marketing LLC. But what happens is the psychology of the American farmer, because they've dealt with such higher prices and they're dealing with higher inputs, is they say that the market has it wrong and the market's going to come back to my cost of production. And so when Russia invaded Ukraine and you had a cost of production of $5.50 and you sold $8 corn, markets didn't care about cost of production. They cared about supply and demand. We're in a supply and demand market. We have too much supply, and the American farmer and the world farmer can't stop producing. They can't stop producing grain because it's a big cycle, just like the cattleman just doesn't get out of the cattle business overnight. So nothing makes someone stop producing, Scott, like lower prices. Now, quick note, I might just talk all the way to commercial break. You go ahead and adjust your hair and makeup. But these $5 calls are trading 12 cents. A SEP 450 call is trading 13.5. Our mutual friend, PJ, said that someone did a very large trade in the SEP options. I want to say he said SEP 420 puts that someone sold 5,000. That is the strike. SEP 420 puts, someone sold 5,000 options there. So there's a lot of options trading. There's a lot of people gearing up for Friday's big report. I will be down with you in Nashville on Friday, I believe. And we have end of the quarter, end of the month, USDA stocks and acreage number fireworks before the 4th of July. Back to you, my friend.
All right, that's great stuff. You're right. Yeah, right now there's nothing to scare the funds out of that big short. I think they've been leading the way. They've been stepping on it, and until we get something that changes things, yeah, it's been pretty tragic to see some of that stuff happening with the floods. But is that big enough to really change anybody's overall macro view? And I don't know if it is. So we'll have to wait and see. And a lot of times the bummer is about that, Tommy, is it doesn't really come to fruition until January. You don't really start to see it in the numbers for a while. So we'll have to wait and see. Thanks for that, though. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading of Valparaiso, Indiana. We'll be right back. All right, welcome back. It's time to talk about some livestock, right? Wear this jacket all day long. You can't not talk about them, right? So let's take a look at live cattle. I brought them up. And last time we were there, folks, it was mixed. It still is mixed. It doesn't really know what it wants to do. We're 37 cents lower in the August to 184.45, 40 cents off the low of the day, but we've had just over $1 range. Okay, so let's not get too excited about it. October's up 50 cents to 184.30, and that's 65 cents off the high of the day there. And again, we've just had over $1 range as well. So mixed, small range, okay movement, but still doesn't really know which way it wants to go. Let's talk about feeder cattle then. Maybe we've got a better picture there, and we do a little bit. August is up 7 cents, 3 ticks to 258.97. That's just 57 cents off the low of the day there. And we've got a $2 range. If you go out to deferreds, though, we start to lose real estate. We get out to November, that's down 15 cents. But again, I don't want to take too much time out. We're only down 15 cents, right? That's November feeders. 260 spot 35 is last there. So let's move along. Not a lot going on there. Anywhere between 7 cents higher to 45 cents lower, but still all around that unchanged line. Let's move to lean hogs. The fronts, August is up 75 cents to 87.47. But the backs, as you go out to deferreds, you start to lose a little bit of real estate. Deese is down 30 cents to 68.62. Let's bring him back in to see what he's got to say about it all. That's Tommy Grisafi, Advanced Trading, Valparaiso, Indiana. Tommy, what do you think?
Scotty, real quick, before we talk meats, and we'll do that real quick. Huge spread action in the outside markets. You'll talk about this on the Cow Guy, but the Dow Jones is down 400 and the NASDAQ's up 100. We've been seeing this back and forth action there. When it comes to meats, I feel that cattle are extremely happy at this price today. They've done what they need to do to get to this price. They've been up, they've been down, they've been around. This today, for this moment, is the fair price of cattle. We haven't heard that nasty phrase. I'm not even going to say it about a bird and some other stuff. Nope, I didn't say it, but that's all calmed down. Pork feels cheap versus beef. I understand on the Cow Guy Close today, you and I are going to be talking about a little beef and some fake meat, but the risk needs to be managed. If you bought expensive cattle, we suggest you look into LRP insurance and layer that with options. Back to you, sir.
Yeah, you're right about those spreads. I will talk about it later, but it's generally, if it's got anything to do with AI, and there's more stocks with the S&P 500 and NASDAQ that have got artificial intelligence trades in them than the Dow 30. So that's just what happened. Yesterday was the opposite. We'll see. But NVIDIA is back up about 4.5% as we speak right now, and that's a large part of the reason why we've seen the gain in the S&P and the NASDAQ. But other than that, we've got a lot to talk about in the show tonight, so hopefully everybody tunes in. But thank you very much, Tommy. Tommy Grisafi, he's with Advanced Trading, great friend of the show, both Cow Guy Close and Market Day Report. He's in Valparaiso, Indiana. Bring it back here and hand it back over to Suzanne.
Always great stuff. Your brother from another mother. Love you guys together.